Salam everybody, this is Investor Shake back at it again with another video. Now, this week has been a bloodbath in the stock market, mainly for growth stocks. Now, a good example is DocuSign stock. This company has reported their earnings and the numbers weren't looking so good, and as a result, the company had a 42% drop in price on a single day. 42%. That is a substantial loss right there. So this stock was at $230 and today just dipped to $140. That is insane. But as we see in a lot of growth stocks, a good indicator is the Russell 2000, which is the index for small cap stocks, one of them being CleanSpark. Now, a small cap company is one that has a market cap of less than $1 billion. So this is a good index for that. And as we see here, the past month, the entire index was down 10%. So this shows you that a lot of small cap stocks are in the red at around this time. And one of the reasons is tax loss harvesting, which at the end of the year, investors will sell their stocks at a loss so that they can get some capital losses, which will be more favorable when it comes to filing taxes, because if you profit on your stock gains, you have to pay taxes on that profit. But if you had capital losses, that can lower your tax liability. But the IRS is smart about this. They only limit the capital losses to $3,000 per year. So if you lost $50,000 in the stock market this year, you cannot write off that entire $50,000, only $3,000, and you can carry that loss each year until the entire $50,000 it has been written off. And in addition to DocuSign, another stock that I want to talk about is Teladoc, which is now at double digits for the first time since early 2020. So if you zoom out of this price chart, the last time that it was at $100 was January 2020, and since then it has shot up to $200 and then $300, and then since then started crashing, and now it is below $100. So you're probably wondering, what am I doing with my position? I have decided to trim my position at a loss for Teladoc so that I can take advantage of the tax loss harvesting. So that way I won't pay as much taxes on my gains. Because when I filed my taxes for 2020, I did have a lot of gains on my 1099, which Robinhood sent me. And as a result, I owed taxes to the IRS. So if you made a lot of money in the stock market, you will have to pay taxes on those gains. So that's something to look out for. So this can be a good way to trim your positions, especially if they're at a loss. For example, if you own a stock and it's not doing so good, you don't have to hold that stock forever. You can sell it at a loss and then put that money to a different stock which you may believe has more to gain. So that's one thing to look out for. But with the stock prices being this low, this is an excellent buying opportunity. Now, I know that with the stock prices crashing, it's causing your portfolios to be in the red, which can be discouraging, disheartening. And if you look at human psychology, whenever stock prices are very low, that causes a low market sentiment. Nobody wants to put their money in the stock market if the stocks are falling. And that's usually due to fear in the market. And when you're investing in the stock market, you may experience two emotions. That's fear and greed. So as Warren Buffett always says, be greedy when others are fearful, and fearful when others are greedy. So, given the fact that stock prices are crashing, mainly growth stocks, it may not motivate anyone to put their money in the stock market because they may fear losing their money. But if you think long term, we may get out of this. I don't know when exactly. It could be a couple months, could be a couple years. This is what we call a bear market, and it's going to take some time for prices to recover. But in the meantime, if you have some extra cash lying around, this will be a good opportunity. For Investor Shake, myself, I like to dollar cost average. I don't like to buy stocks in lump sums. I like to keep a cash reserve just in case for moments like this. And as a result, I will be purchasing some stocks at their lowest price and take advantage of this because I think of this as a sale. For example, let's take a look at CleanSpark stock. So the last time I covered this stock, it was in the low 20s. But now, with a lot of these growth stocks falling, we see CleanSpark returning to the $13 level, and the last time it was at the $13 level was back in October. And then we saw the stock price go up to $22. And then now we've seen it return to the low teens. So with the money that I received after selling my Teladoc position, well, part of my position, I ended up putting some of that money into CleanSpark stock at $13 a share. Because I actually feel more bullish with CleanSpark than I do with Teladoc in the short term, of course. And I do plan on adding back to my Teladoc position after 1 month, because once you sell your stocks at a loss, you're not allowed to buy back into the same stock for 30 days because the IRS will label that as a wash sale, which means that any losses you've incurred will not be counted as a capital loss, which really sucks because I did have wash sales the last time I filed my taxes, and I learned that the hard way when it came to realizing that my losses are not going to be accounted for because of this wash sale. So when it comes to Teladoc stock, I will be adding into my position in January at the latest. So with that being said, take advantage of this dip while you still can. That doesn't mean to buy the stocks that I'm showing you. Take a look at the stocks that are in the market and take a look at your watch list, because you may have stocks added onto your watch list which may experience a dip. So try to take advantage of this attractive prices that we're seeing in the market, because it will pay off in the long term. This is Investor Shake, checking out.